this special case study on Sienna Villas apartment homes. As you see the picture right over here, we'll go one by one, kind of take you through the whole process, how it got started. Some of you might know me. I've been all over the place. Anyway, this is Mr. Smiles talking to y'all, and the founder of president of Monil Investment Group. I was able to coveted 17 months, raised a lot of different properties and so forth. We have about 4,500 doors or something now. So, for educational purposes only, this case study is put together. It will take you through the buy process, the manage process, and the sell process, and this is a really cool presentation that we have put together. It was a property that I bought actually sitting in a car. I was driving when the broker called me and they said, Vinney, oh my gosh, this looks like a pretty good deal. 140 operating units and 16 burnt units, one building. And would you like to buy that? I said, okay, let's put an offer. And we did. We had done some work before in the same city. So I knew what the price per door is going for and things like that. That's how the little story goes. And we purchased the property. Actually, this whole building, the first one, I'm trying to picture it now. Where is it? Right here, this one. See, this is their adjoining property, but this was our property on the left. And this was the building that was burnt, by the way. So I just remembered that. And then this is the already built back up. Look at that here. So how did we buy it? Again, this was in the emerging market, which I had done a lot of research. South of Houston, Brazoria County, where a lot of businesses were coming and the jobs were coming and so on. So that's why we purchased it. So emerging market, buying emerging market is very, very important. Then of course, counter LOI was sent and they accepted the LOI. The seller did within 45 minutes. It's record time. I've never had somebody accepted that quickly, but then we got into closing and everything like that, right? So let me take you through in the buy process. We bought it over there on December 22nd, 2014. It was 140 units which were operating, 16 were burned, and we paid only $3,550,000. That's not too bad. $25,357 per unit. And then, this is almost like $15,000 less per door compared to the neighboring properties, which had 16 burnt units. That's why the price got reduced. Also, I found out that the seller got $1 million, approximately $1 million from the insurance. So actually, they gave me a little, lower price so that they don't have to build it back up and so forth like that. Anyway, so occupancy was 95%, but there was a lot of problems, a lot of challenges. I would love to take you through the income actual, is right there, projected after Vinney's estimate. When I said that we're going to build that 16 units back up, then it's going to increase the income to almost $1 million, and then expenses of about 700. NOI will be increased by almost 80,000, and the cap rate also, will be was pretty strong at that time, 7.54, and then COC, that's the cash on cash of 10.67 right there, right? Then transaction, again, I don't want to bore you guys, we took all that down payment, whatever. The strategy was that some of the maintenance renovation capex works were done on this property, start the demolition process of the burnt units, pressure wash all the exterior units, staircases, balconies, porches, everything, do minor upgrades, which I did, gradually increase the rents to market rents, almost $98,000, then value add of 16 units, which was going to bring a lot of income. Then location, high growth area, exit plan 5 years, which I will show you towards the end how it came out and everything. It came out really good, right there. So manage it. We already are vertically aligned, so we manage ourselves, right? Everything. So we were getting our manager and the leasing person and everything, and also the tech person, HVAC certified, was already there. Actually, for 14 years, we took the same person, actually Alex. He helped us quite a lot. So we managed it. We changed the name. Whenever you're doing big renovations, it's better to change the name. And we changed it to Sienna Villas. And we needed that much money, need to raise, which I did. Actually raised a little more, hired the property manager, like I just said. Curb appeal, we got those big, beautiful flagpoles, 30 feet, high. And I always like to really put some nice big flags, and then after we have done renovations, we invite the local city council, the building people, permits, and Better Business Bureau to come to the property and have lunch with us, and they do ribbon cutting ceremony. So that's a very good one. We added the curb appeal quite a bit. Ribbon cutting ceremony, there we go, including the mayor came. Double parking issues, we solved all those. Local factory maintenance, high output power, all that stuff right there. And then forecast was like year 1, NOI will be this much, for 5 year it will be this much, cash flow will be this much, kind of like that. Actual came like this, so we just kind of did a whole study so that you could see what was the before and after and so forth, like that right there. But then part 3 is the selling part, right? That's a very, very important part where you have to, I will give you, then I'll take you to another portion here where how we did it. Let's do this over here. See, remember we bought it for 3,550,000 and I put in about 1.4 or so million into it. So it was a pretty spectacular return from 25,000 a door to 54,000 per door, 114% increase to 2 times the purchase price, 2.14. And this was the square footage rentable area. And then a year built was this, sold B, and we sold it in 2019, January we sold it. But let me take you over here to the offering memorandum. This is my brokers put together very nicely. You could see just a whole different ball game now, what we saw before and what we purchased to now. This is what the brochure looked like. Our good friends over there in Houston Income Properties, they were able to sell it for us, and we were able to complete the deal and everything. But this is a good way to look at all the breakdown of the units and all. I thought it will give you some idea. And then of course unit mix, and then property highlights. We changed it from a C class to a B class. And Sienna Villa in the Brazoria, part right there, 16 units, received significant rehab because we put granite tops, moldings, all steel appliances. So the new buyer was able to buy in. If he were able to put more money into the rest of the buildings, he could also make it a very attractive deal, even bigger than what we took it to 8.550, right there. So you could kind of see where all these things are right there. That's south of Houston, where the property, look at that. That's where it looks after it's built. Look at that. All the things. So this was burnt, as you know, and when we bought it. And this is the real picture of all that already done, so that it was a very good feather in our cap. My whole management team, construction team, asset management team, everybody together, And then this is how it funneled down to, showing the brochure, interior designs. Look at the pictures. You could see them. We did the outside, the interiors. We demographic shift also. We did change that. So essentially, I would like to kind of capture this case study by saying, it all depends how you're doing really good things right from the start. You want to buy in a good area where you could have emerging market, job market has to be strong. Then you look at a value play, how you're going to increase the rents and things like that. All those things are so important. RUB system, we did everything. The leasing office, the office was like a one blank thing. We put walls and corridors and all, and made a cafe and had, just like Monil communities, we do this. You could see all these things, then comparisons and all. And anyway, I wanted to share again, Houston market, Brazoria County, a good broker will put together a beautiful, beautiful package to sell, right? That's the main thing, is to make sure that we are able to offer all these things to give to the buyers what they are buying, right? They might be anywhere in California or anywhere outside in the world who wants to buy that. So it was a very, very hard, self, fulfilling, I would say, that my investors got great returns. I think we gave out almost 28% IRR. Not bad at all, over 5.5 years, so forth like that. So I hope you liked it, guys, and thank you so much for joining me today, and God bless you. We'll talk to you again.